And we're going to get to that special guest here in just a moment. First of all, let's set the stage here and see where the grain markets are trending at. A little bit of strength over here in the soybean market today. Not the case for the corn, though. We're down 2 pennies on the front month, and that far out new crop is down 1 1/4, 3.89 1/4. All right, on to the soybeans, though. We did get started with a little bit of a higher trend. We've backed off of some of that already. 8.74 on the March. That is up 1.5 cents. Over in the September, we're up 3/4 of a penny. We did have this market as much as 3 pennies higher earlier. Now, in the wheat market, Chicago wheat next. It's down 1 1/4 on the front month of March, and the July is down 2 pennies. Kansas City wheat is down to about 2.5 to 2 3/4 all the way across the board. Minneapolis wheat, it's also on the lower side as well, except for one contract that's up 1/4, but the rest of this is down anywhere from a half to 2.5 cents. Even cotton today. Cotton got started out with a little bit of a weaker trend as well, and it's weak all the way across the board, except for the front month. Chris Swift Trading here. All right, first of all, this little bit of a pullback here in these markets. And that was after we got off to a higher start here at the beginning of the year.
We did.
So is this cyclical? Is this something we usually see, or is there something else at work here? It just seems like there's a malaise just hanging over the market right now.
Well, right now we've had a lot of bad news in the market. We have this tariff issue with China that got resolved, and then we saw no big purchases from it, so we're still waiting for it. I think the biggest thing with the grain market still is farmer selling. I think a lot of farmers waited till after the first of the year. Now we know that we've got some forward contracts that are coming due in February and March both, and so the market has just got some pressure from farmer selling on it more than anything that I see.
Which makes you wonder, has basis been doing a lot of the heavy lifting in this market to bring out some of that farmer selling?
Possibly. I haven't seen too awful much. Corn has been the biggest one. Corn, we've seen the basis move in it, probably the most friendliest. Soybean basis is about the same, and wheat basis hadn't changed any at all.
What do you think about a floor in here? Do you think we're getting close to seeing some support and maybe attracting the longs back?
Yeah, once we start to get into March and you get the weather to change just a little bit, we'll see what the planting intentions are. And from what we understand right now, some of the trade guesses we've seen, we're probably going to be a little bit heavier on the corn side of planting this year than we are the soybean. So
that surprises me. And the only reason I say that is because so many parts of the northern part of our viewing and listening area didn't even get the crop out. There's still crops standing out there, and they don't have the spring field work done yet.
Well, and there is one thing for that to go into corn there, but a lot of the soybean looks that South America continues to increase on their soybean production, and they have the en route now with China. So without a huge demand, even though we know we have the tariff deal signed and we're supposed to sell more product to China, we haven't yet. So there could be some skepticism in that.
And they got a big soybean crop coming
up,
too.
They do. It's a big one.
All right. And I think that they're still progressing pretty well with harvest, too, at this point.
Oh, yeah, absolutely. I haven't seen anything that would lead you to believe that they're having troubles right now.
All right. There could be some winter weather headed to the cattle feeding region, so let's talk about that topic.
Okay.
We'll have more coming up here in just a moment. Stay with us right here. We'll be back with more here on the Market Day Report. Straightforward we go, and let's continue our conversation here. We'll start in the live cattle market, and that live cattle market just kind of turned direction here after what happened here. We got the February down 3 now, the April down 2, the June down 10, 111.47. Chris, I was just sure when I read this morning it was higher.
It was. It was when I came down here. It was higher.
And this is despite we got a winter storm headed to a big feedlot country.
That is true. That is true.
So just is this a sideways choppy trade now?
Well, we were quite a bit lower last week. We pulled close to $8 off most of the futures market and didn't do that much in the cash, but we pulled some off the futures. The inventory report came out Friday, showed us we're sitting right at about 99 to 100% of our beef cow replacement. So we're just not going to grow probably anytime within the next 12 to 24 months on our herd size. So we're all looking at demand from this point forward. And that demand has been really, really good. And we think that the export demand might pick up just a little bit and give this big decline a wall of worry to start climbing back up again.
So one has to question then, was this the correction in the market that it was needing or looking for?
It could very well be. It came really early this year. So we generally don't see a sell-off this abrupt in the month of January. It tends to go through the February, April timeframe where we get some bad weather, and that tends to pull little pounds off cattle. But we've had excellent weather in the south. south where the majority of cattle are being fed right now. So that hasn't been an issue. So yeah, I think we probably dropped and are making our spring lows for right now.
Okay, on to the feeder cattle market we go. Let's look and see what these numbers have to show us. And the feeder cattle market mixed now. March down 47, April down 35. You go out to those far out deferreds, we're up anywhere from 7 to 47 cents. It's got to be watching the corn market a little bit here, too.
It does, and basis has changed dramatically. We went from trading a severely negative basis back to a positive basis. Now the index is still trading at 143, 142. Most of the futures are in the mid-30 areas, so we probably just got some convergence to take place over the next 4 or 5 weeks in the feeder market. And they're trying to get rid of a gridlock. So we got too many cattle in the south and real muddy conditions in the north, and cattle just aren't moving at a great fast rate. So.
All right. Now, hog market.
All right.
this is interesting. And the only reason I say that is because of the coronavirus.
Yes.
We did get started out a little bit higher today for the futures. Right now, we're not seeing the gains we had earlier. This market pulled back too. The April, which is our next front month, up 32, the May up 40, the June still up $1.18, but we were higher than this earlier this morning. So is that coronavirus that big of a deal in this market?
I don't think the coronavirus is. I think African swine fever is still the main driver of this market. And we noted that there were some rumors about progress having been made in a vaccine. That's when we saw the 3 limit day down in the hog market last week. And so we assumed that that was a part of it, that if that vaccine is found, it could bring a close to the African swine fever fairly quick, maybe within a year. You could start to see some big results from that.
We still have a hog herd to rebuild.
In China, we do. In China, we do. Yes, a huge one to have to redo. And it's going to be really interesting. I hope to speak with some people at the end of this month to see how that might progress along.
All right. Always a pleasure,
Absolutely.
my friend. Thank you very much. Chris Swift.
Thank you for having me.
Swift Trading here with us, Christina. So there's the latest.
Man who knows his stuff. Thank you.
Thank you,
All right.
Christina.
Thank you, John. Appreciate that.